All right, so welcome to another TezTalks Live, where we dive deeper into the stories and motivations of the contributors and members of the Tezos ecosystem. I'm your host, William McKenzie of Tezos Commons, and today we're joined with our other co-host, Ken Garofalo, and Mason Borda, the CEO of TokenSoft. Guys, hope you're all doing well. How's everything going?
Doing great. Happy to be here. And might I say that opening is first class. Really glad to see all the communities and all the video content that's been produced all around the world.
Yeah, it's good to be here. Thanks for having me.
Great. So, Mason, let's go ahead and talk about your background a little bit. What initially drew you to the blockchain space as a whole, and how did you first get involved with Tezos?
Yeah, so I heard about Bitcoin here and there, like really early on, and I didn't really start poking around it myself until like 2013, at least on the tech side and like actually playing around with the tech. And it wasn't until I like set it up and started sending transactions on the command line that I realized that, I was sending transactions around and there was no company in the middle that was approving that. And I was just thinking like, this probably has to be the first time like this has happened with money. And actually my first company, I didn't believe in Bitcoin yet as sort of a payment system because the price was moving too much and it would take too long for a transaction to get approved. And so my first startup, I was actually trying to make a dollar-based blockchain that integrated with like the ACH network and where you could do like payments and remittance. So that's how I initially got into the blockchain space with the goal of trying to replace Bitcoin. And so
Lofty
I
goals.
spent a year. I spent a year doing that. And then I went to a Bitcoin company called BitGo. And there was just no interest for dollar-based blockchains at the time. So everyone that we pitched was like, why aren't you just doing this on Bitcoin? And so then, yeah, just started out at BitGo. And then I think just fast forward to TokenSoft. At one point, we were talking to the Tezos Foundation. And that's when we started learning about Tezos and what was going on there. We had an employee that was a early contributor as well. And so honestly, even our company ended up working with the Tezos Foundation, but still didn't know much about the blockchain up until that point, until it was later that I actually started poking around it and playing around with the tech.
Interesting. So you actually brought up that you worked with the Tezos Foundation. Would you like to kind of talk about your involvement on the fundraiser? How TokenSoft was a part of that?
Yeah. So we weren't involved with the fundraiser, but we were procured to provide compliance services to the Tezos Foundation. And so those conversations started in, I would say, first quarter of 2018. And so we did put up the verification portal for the Tezos Foundation, which ran people through compliance procedures. That was definitely a very exciting period for us.
I mean, that's a great PR move. I mean, immediately you guys are at the forefront of what the Tezos Foundation is doing. You're setting yourself up as a trusted partner right from the get-go. So from that standpoint, reputation at an all-time high for TokenSoft.
I appreciate that.
Will, let me dive into one of the recent announcements that TokenSoft has made. Andra Capital, you guys recently had a press release that came out regarding the SVC. Mason, do you want to just give us a brief overview of that announcement, and then I'll dig into it a little bit deeper with some more questions?
Yeah. So basically, TokenSoft provides enterprises, fund managers, and financial institutions with infrastructure to issue security tokens, issue and manage security tokens. And so this was it's an example of an asset manager that was looking to put their fund on the blockchain. And so we were hired to provide the technology to make that happen. And so that was a really interesting one. For that, we did provide compliance services in over 50 countries. And we were basically hired to roll out the tech as well. So to put the token on the blockchain and to actually provide that infrastructure as well. So that's what that announcement was about. And we're super excited about working with them.
Okay, cool. So that's SVC, Silicon Valley Coin. So you guys actually wrote the smart contracts, or you have some sort of system in place that creates the smart contracts for the token itself, for the security token. Is this the FA2 standard, or is this the FA 1.2 standard that's being used?
Yeah, we're still looking at FA 1.2. And that came out about the time that we started working on this. So basically what we help companies do is, we do help them with the smart contracts. And basically we're providing a layer on top of the blockchain to help interact with security tokens. So if you need to issue security tokens, you can do that through our platform. If you need to perform any compliance activities, this is very different from like the DeFi world, but with security tokens, sometimes you might need to freeze a token or you might need to revoke a token. And so all of those activities are possible through our platform. I think one of the differences between security tokens and traditional blockchain like applications is security tokens do need to be fully permissioned. And the reason is that they have to mimic paper contracts that investors have with the company. And those are governed by a certain set of rules and clauses. And so we're the technology that makes those rules and clauses possible on the blockchain.
So Will, feel free to cut me off anytime or jump in. I have a lot of questions on this topic here. So Mason, about the wallets, is there any wallet currently available for SVC? Is it even to the point where it's live on the network? I know you mentioned that you have to have certain jurisdictional restrictions where you guys are almost acting as like the central authority when it comes to a user sending a transaction to another user. Like, walk us through that process and if there are any wallets in place that you guys currently work with.
Yep. So in terms of SVC, we're still about like halfway through the project, so you'll probably hear more and more as that progresses. What we do for wallets is we have the TokenSoft investment accounts now. So as an investor goes through the journey, they can invest in the security token, and then they pop into a investment account, or they set up an investment account where they can actually interact with their tokens there. And so that's what we're providing to customers that use our service, but it's not like a mandatory option. So if there are other wallets that support FA 1.2, they're welcome to use it. But that's sort of how we're structured. We try to be flexible, so we're not trying to like keep everyone in a cocoon. But there's no wallets announced as of yet. It's still in progress.
I'll go ahead and add in a question here. So the Silicon Valley coin represents a unit of interest in the Andra Capital open-ended fund. Does this trade in like a secondary market? Mason, are there any jurisdictional based restrictions or anything like that?
Yeah, so I can't speak specifically for their restrictions, but the way like the restrictions work is a issuer might try to enforce the secondary transfer restrictions country by country if they're being super conservative. On the other side of things, I'm sure you've seen in the market where US and non-US are just treated differently. So there's more open, flexible treatment outside of the US, and then there's more restrictive treatment in the US. I think the goal for the industry is to have these as liquid as possible. And so we will have some infrastructure that we will be announcing to make that happen. But it's not going to be like a traditional stock market at all. It's still like with security tokens, I think people are still trying to build towards that goal. And the industry is going to be taking incremental steps to get there.
Yeah, that's important that you mention liquidity. I think that's one of the main issues with small cap stocks or unique assets like security tokens, where an investor may be able to get into this at a fixed rate, but how do they get out of it? How does the secondary market work? You said there's no target to have these assets listed on traditional exchanges like NASDAQ, NYSE, ARCA. I know you said you have an announcement pending. Is there any more insights into the mindset you have approaching this increase to liquidity that you guys are seeking?
Yeah, so I think there's approaches for like private markets, and then there's approaches for like public markets. So what you were sort of mentioning, those exchanges, those are public market exchanges. They're retail facing. They're very, very liquid. Private markets do have different structures by which these things can transfer. And they're not completely open, which I think is just going to be a challenge, but it's going to be an iteration. Like we have to try something first, the industry has to try something first, and then iterate towards whatever they perceive the ideal to be. We do have some registered offerings that we're doing. So these are, again, structured for public markets, or they're pending sort of effectiveness or registration. And so these structures do enable for full retail facing like access. And so one of these is a stable coin. And the interesting thing is it's continuous subscription and then quarterly redemption. And I think this is kind of interesting because it's like a public market structure, but it's sort of what you would see in DeFi with like stable coins. And so I think this is an interesting sort of niche that's sort of developing that I think might become bigger and bigger. But that's another option, is you can go direct to retail using our platform if you're registered for it. And so that's another option that's possible if you're a registered offering.
Okay, so direct to retail. This means there's no like accredited investor restriction for the retail person to participate. It's could be the average Joe with a few $100 in his account.
Yeah, and you can even do it without an investment bank.
I like hearing those developments, and you're definitely taking this trial and error approach as well, where you're trying to see if something works, and if it does, you're going to keep expanding on it. So that's always good to have. So in regards to SVC, we actually had on Jonas last week, and he talked a bit about the Staker token, Staker DAO, what they were doing. And it almost to me reminded me of like a mutual fund with Blend, I believe they were releasing. So with SVC, do you know if this happens to trade on a NAV, kind of like a mutual fund?
100%. So all funds on our platform do disclose their NAV. And so we do integrate with like fund admins that like evaluate the stuff and provide reports for it. And that's true with like any market, like with any market, whether it's real estate, just fund, like alternative asset funds or whatever types of funds, there's always going to be pricing data that the investor needs to see. So with funds, that's the NAV. With real estate, that just might be valuations on the real estate that are done, or appraisals that are done on the real estate. And with like companies, it's like equity companies, it's like 409A valuations. And so all of these things are sort of important, especially with in like retail facing markets or institutional facing markets, so people can accurately price their investments. So that's some of the more mundane and boring stuff that's involved here.
I like that stuff. I'm coming from the old world of custodian banks and traditional finance, so that I can relate to that kind of stuff. So getting into the next question here. So Andra is the portfolio manager in this situation that we've outlined. Who is acting as the custodian bank that handles like the settlement aspect of things? Am I comparing apples to oranges, or is this in alignment to like what a traditional settlement structure would look like, where there is a PM, there is a custodian, there are brokers? Is the middleman the custodian bank? Is that being cut out in this situation? Is TokenSoft the custodian bank?
Yeah, I think I think it depends on like what kind of securities you're looking at, if they're like uncertificated or certificated, or if I can't like speak to Andra's structure specifically, but I'll try to provide an outline of what's possible out there. It can be possible to completely collateralize the security token. If it's sort of a certificated security, it's more like it operates more like a bearer instrument. And so for some customers, we do integrate with traditional custodians so that the asset is actually one-for-one collateralized in a traditional custodian bank, and then the token is out there moving, and then you can redeem it for the actual asset. So that's something that's possible. If you've done a lot of like startup investments, I'm sure you know that like it's just literally a piece of paper you sign, and that's what is telling you what you own. And so like, where's the custody there? There is no custodian really. Like, it's the piece of paper that you have that says that you're owed that. So private market shares operate a little bit more like that. And that's something that we can support as well. So it depends, and it depends on like what regulations people are falling under. So if it's like Reg D, then it's probably just a piece of paper, and the token is just representing what it says you are owed on that piece of paper. And so with more public market type securities, it could be the case that all of these things are one-for-one collateralized. It could be that it's a private market security that's a stablecoin that needs to be collateralized as well, and so there needs to be a traditional custodian in the back. So it depends on the structure, but having custodian there does reduce the risk, but it does increase the centralization. So when people are looking at like launching projects, that's definitely something to think about, is like, how much do I want to integrate with a centralized system based on the type of maybe investors I want to try to attract, or based on the types of institutions I want to partner with. Or maybe you want to stay completely decentralized because you don't believe in banks and you want to replace the banks, and so you don't even want to integrate with them. So that's less common with security tokens, but that's another approach that people are taking in the DeFi and the blockchain space.
Yeah, very cool. And thanks for the explanation on those public versus private share offerings, and what the PM needs to think about going into setting up the structure of their offering. So when do you think we'll start seeing companies like portfolio managers like Janus, State Street Global Advisors, Vanguard start taking advantage of this kind of settlement technology for their traditional funds? Do you think that's in the near future? Are you having these conversations? What are their requirements? Any insights?
Yeah, so I think there's been a lot of they've definitely like looked at the space a lot, and I think they might be experimenting with a couple things. Where I landed is like, I'm not sure that the large banks or the large institutions are the ones to innovate in the space. And where I sort of landed is like, it is on us as startups to just innovate a little bit faster, to have a higher entropy of ideas and see what's possible there, and hopefully outgrow these banks and acquire them one day. And so I think I don't think that the institutions are going to be able to do anything meaningful, maybe besides provide like ancillary support for maybe as custodians, for example. I do think it's still going to be a space where the smaller companies can innovate faster, except for custody. That's still a very capital intensive sort of thing to take on, and it's still very complex and hard to get through the regulators. Same with like getting a federal bank charter. Like, that's also very difficult and a high bar to get, and so that's something you probably can't replace. Except maybe Bitcoin is doing that. I don't know. And so I don't think the institutions are going to be able to move quick enough. I do hope to see more innovation in the security token space. We're definitely going to be trying a lot more things and going to be making more announcements about this stuff. So that's sort of how I see the institutional market in this space.
Interesting. Real quick, Mason, we actually have a question from the audience. Susan J. She asked, why did TokenSoft decide on Ethereum when issuing 4 million in equity to investors and not Tezos? Do you think you could spend some time talking about that for a second?
Yeah. So part of this is just where our infrastructure is with like Tezos, with different blockchains. We have sort of 3 separate services. They don't always service all blockchains. And so in this case, we did roll out some new infrastructure. It was built on Ethereum first just because of our customer base. And so the rolling out the equity was sort of an experiment to get our feet wet, trying our own product, and sort of getting some usage out of that before we rolled it out to a broader customer base. And so that was the reason. We're just a little bit farther along with our Ethereum infrastructure.
That makes sense.
I was very sad about it. I wish it was on Tezos, so I will say that.
We'll forgive you. We know you're a big Tezos supporter, so we know you're in the right camp. Getting back to some of the custodian banks, I'm hearing whispers out there from some of my old contacts that, you know, one of these world's largest custodian banks is developing their own in-house blockchain-based settlement solution. Do you know anything about what these banks are experimenting with, why they wouldn't want to use public infrastructure like a Tezos blockchain, and why they would be doing it in-house? Sort of, maybe they're even acquiring a smaller startup that's focused on this area itself. I don't know if you heard any whispers or have any insights as to what these custodian banks are starting to play around with.
Yeah, so they're from what we've seen, they're half public, half private. So half of them are still in the private blockchain camp. The other half are sort of they went deeper with the infrastructure, and they know that public blockchains can serve their needs. I think when it comes to like what's appropriate for a larger bank, I do think like the formal verification on Tezos does go a long way. And like if you look at like semiconductors like out there, they have to be the most resilient systems. They have to last for years and years. And what is one of the testing processes that they go through before they go to production? It's formal verification. So now with smart contracts also, you can actually literally test every input and output before taking into production. So I think for like very high value systems found in these institutions, I do think it's possible that they will be looking at something like Tezos, just because it's more robust on that end. But I would say, yeah, they are looking at public. Like for example, Fidelity only deals with public blockchains, right? And there's a few other large ones like that are not so public about it. I think the fact that EY is only innovating on public blockchain says a lot. But what types of stuff are they working on? I think one of the challenges is like they're building infrastructure where a majority of the connectivity is going to be with startups. And so if they try building something, it's probably going to look like the existing infrastructure that they have. And it's probably only going to be able to serve the existing customers that they work with. And the issue is all the innovation is sort of outside of that. And that's going to be one of the challenges, is how do those two sort of pieces meet? And to the extent that's possible, and that's very good for the industry if we have large institutions serving the market. But at the same time, like, is it likely to happen? It's hard to tell.
So wrapping up this section of questions here before we get back to Will for another set. So give me your best, you kind of already did it with the answer there, but your best pitch on why an institution should consider using TokenSoft or Tezos for these type of settlement solutions or security token solutions.
Yeah, I think the most like lucid example for me, like this is something I just sort of realized as I was playing around with Tezos, is if you look at how we transfer value on Bitcoin or Ethereum or any other blockchain, we have to make sure it works first. And so we try to send a very small transaction for 0.01, and then we send the remaining amount over, just because we have to make sure. But if you have like formal verification tests where you can just run something regardless of, like, without expending gas, or without having to wait for something for value to transfer over the blockchain, you can now actually test that transfer for $1 billion with a test before actually sending, and actually simulate the exact transfer. And that's something you can't really do elsewhere. And you're always gonna, like, in my head as an engineer, I'm always gonna have the question of, like, is this money gonna go through to the other side when I send on a blockchain? And that's an anxiety that will always exist. But if I can actually run a formal verification test before sending that value, then that anxiety is gone. And I think that's the sort of comfort that large institutions need to be able to innovate in the blockchain space.
Yeah, that's a very interesting thought right there. That's personally one of the things that attracted me to Tezos was, formal verification, and especially in terms of STOs, because you can, run this formal test to make sure it executes smoothly. But I think in general, compared to other chains, it's not so much just that, because there are other chains who uh, offer that. But I think with Tezos, it's really something that is cultural in a sense. What would you say to that, Mason?
What do you mean, like cultural? You mean the attention to detail, or the from what angle?
I think it's something that, it's tried to be created in a cultural sense. Like Tezos strives to build the tools, infrastructure, and make it something that is just universally applied throughout the ecosystem.
Yeah, I think that's part of what like drew me. So again, like we started working with the Tezos Foundation, but I wasn't familiar with like the blockchain, like the details of the blockchain or why, right? We were just moving really fast. And it wasn't until a few months or a couple months after that I actually sat down and like went through everything. And I was like, and part of it was just the people that were around the Tezos space were very skilled, and like they're sort of like top 1% of whatever like industry they're in. And that was sort of something that caught my attention. And so just the quality of the tooling that was out there was very high, and that was interesting. And then the other thing was just the attention to detail and the interest in providing high quality infrastructure was very interesting to me. So I was very early in the Ethereum space and built like the first multi-sig wallet for Ethereum. It was a web wallet, and the problem back then was like a lot of the tooling was very like I don't think you had the right expertise in the space back then. It was very like scrappy, and the contrast I saw with Tezos was just the tooling was just very well thought out, just from a feature perspective, from an architecture perspective, and I think that's something that was definitely unique to the Tezos space that interested me at least.
Yeah, definitely. The tooling has certainly improved. We also just heard news about Truffle Suite integration with Tezos. So it's definitely getting better. But we have another question from the audience. It's from Blind Ripper LP. He asks, what do you use for KYC? Do you see a chance to take this process on chain through zero knowledge proofs? An example?
So I think here's what sucks about KYC is the company that is, well, maybe a lot of things suck, but the worst part from a cybersecurity perspective is that the company that is running the KYC has to maintain the data in case a regulator comes to them. Like the point of doing KYC in the first place is to keep regulators happy. And so what happens if the regulator doesn't come to you right away when you're onboarding that investor or purchaser or whoever that is? What if they come to you 3 years later or 4 years later, and because they were tipped off about something or someone was unhappy? And so from a cybersecurity perspective, like the thing that just really sucks is that you have to maintain that sensitive data, and you have to keep it on hand in case the regulator comes. And so I think that's always going to be a challenge with KYC. Can you put it completely on chain? Well, now the data is on chain. Like an attestation that KYC was done is not enough. And I think that's the challenge. Like you have to have the reports and printouts to show a regulator, hey, these are the things I checked, and this person was cleared, and I did my job. The second best thing you can do is to take that data offline. So we have been requested before to take KYC information offline and delete it, and we're happy to do that. That way the issuer can maintain their own data however they want, whether it's offline, whether it's online, And I think that's the best structure that I've seen so far. But yeah, KYC is just something we have to do, and just one of those things that we have to get comfortable with from a security perspective, from a compliance perspective, if we want to operate in the space.
Yeah, definitely some good insights on KYC there. So next audience question is coming from Wayne Keteru. Is Tezos not having a privacy feature yet still a hindrance for Tezos being more widely adopted for STOs? He prefaces the question saying that he understands Nomadic Labs is working on a privacy solution, but it's not available yet at the moment.
So I think that's one of the things that we heard early on, was like institutions were being stopped from doing secure tokens because of privacy. I'll tell you about some of the challenges we had. So we put our equity on chain, and there are some issues with that. Like, if you have employees in a company, they all maybe negotiated different, like, I don't know, different amounts of equity. Like, is that going to be a problem? For us, we decided not to put like employee equity in individual wallets on chain, and so there's going to be like decisions like that like as a business owner or as an institution you're going to have to make. So you can choose to just have maybe different buckets. Maybe it's a single wallet for all employee shares. Maybe it's investors get shares uniquely, and so that's definitely a challenge. I think having a robust privacy solution would remove that anxiety. For me, it was something I could engineer around. I do think that there's nothing wrong with more privacy technology. I think if we can put more on chain and have the transactions be more transparent, I think that's a good thing for the financial markets. I think there's like a lot of issues with lack of transparency or people tampering with data in traditional financial markets that the blockchain naturally solves, because every transaction is tracked. And to the extent we can make more people more comfortable putting all that data on chain, then I think that's a great thing. I don't think it's holding it back though, but it would be a nice to have.
Some good insight there. Thanks, Mason. Kind of shifting away from STOs. Mason, would you mind talking about USD-TZ and some of TokenSoft's work on that?
Yeah. So I think that's definitely a project we're pretty excited about. So that's a stable coin on Tezos that's collateralized with USDC, and on the other side, a stable coin on Tezos is minted 1 for 1. And I think this structure is really fascinating for just for Tezos, because the entire structure is on chain, and I think that's interesting. And so you have pretty incredible transparency. Like, you can actually see it's like real-time proof of reserves on both sides. I think there's definitely a challenge with proof of reserves and exchanges, as well as if there's money in the bank. Like Tether just historically has had issues with that. And I think USDC, the money sits in a bank account, but when you have all the assets on chain, I think that's very, very fascinating, because you have an audit trail that you can look at and take comfort in. So yeah, so that's something we're really excited about. I think just anything where you can sort of real-time subscribe, redeem is very interesting, just because you can have that real-time liquidity and it's collateralized. So that's something we're really excited about for those reasons.
Absolutely. And in terms of redeeming, what are the restrictions on who can mint and redeem USD-TZ? Could you kind of get into the redemption process?
Yeah. So I think so on one side you have Ethereum tokens like in USDC that are coming in and out. On the other side you have USD-TZ coming in and out. And this is a fully on-chain solution. We also have other structures with other customers where it's a bank, a traditional custodian and a bank in the back. And the two things we have to be able to do is just allow for subscription or redemption. So what is subscription? Subscription is you put in $1 on Ethereum and you get $1 on Tezos. And so that's one flow that exists. The other flow that needs to exist for this type of stuff is the redemption flow. So you have one USD-TZ, you want to redeem it for the USDC that you put in. And so the opposite flow has to be possible. Right now, the structure isn't like fully real time, just because it needs to be iterated on a little bit more. But I think the holy grail with all these stable coins is just to have that issuance and redemption actually be real time. Like it should be like cashing out money out of Venmo into your bank account, or maybe not. that takes longer, but it should be like basically instant. And that's something that we can actually have full transparency with on chain. So ideally, what happens is on one blockchain, you send money in for redemption, that's burned, and then on the other side, you see the transaction processing instantly on a blockchain explorer. And so I think that's sort of the holy grail for these fully on-chain stable coins, and we're super excited to see this sort of get out there in the wild.
Curious if you know the fee structure. So you say it's collateralized 1-to-1. I'm just trying to think of how the hosting company would make money in this. So Marabi's company, how is he actually profiting off of this? Do you know if he's if the collateral lives on chain, he can't be investing that, you know, in some fixed income product on the side, right? So is there maybe a fee when a subscription or redemption happens?
That's something that I don't know if I'm the right person to speak about that. I think that is one of the challenges is if it's 1-for-1, there can't be a fee. I think that's definitely a challenge. With other stable coins, I know they say they're 1-for-1, but there is a fee. There's like a processing fee to get in and out. So that might be something that's out there in the wild. But yeah, I think you bring up a good point. Is like how can there be a fee if it's 1-for-1? But that's something I don't have an answer to myself.
Maybe that's for the next episode of TezTalks Live. We'll have on Kevin. So one of the other questions here. So gas efficiency for the USD-TZ token. Did you have any play in creating that token smart contract? And can you explain a little bit, if you know, about the gas efficiency associated with it?
Yeah, so I think this particular contract was developed by Cryptonomic. So this is sort of a project that we're jointly working on. In terms of gas efficiency, I don't have any good answers for that. I know on our platform, like anytime we mint or we allow for transfer through wallets, we try to pay the gas ourselves. And historically, like our contracts have always just been super lean in terms of gas because we don't overcomplicate things. We try to just create like minimalistic contracts. And so, yeah, I can't necessarily speak for the gas efficiency of this particular contract.
This almost leads me into thinking from an investor perspective. Of course, we never give investment advice, but if I'm trying to weigh what kind of buy demand is going to be on the XTZ token, which is used to pay gas in these smart contract transfers or interactions, what would you say like a traditional day looks of 24-hour gas costs that you're paying internally or with all the projects you're working on? Like, is it just under a Tez, you know, between 10 to 20 Tez? What are we looking at?
So I think, yeah, so this particular project, we haven't gotten like up to scale where we can get metrics like that. Generally, what we spend is maybe like 10 to 50 cents per transaction. And we have a structure where we can like monetize for that. Like the fees like this, we try not to pass on to the investors or onto like retail facing, just because it's not something they necessarily know how to deal with, especially if they're institutional. Like they don't want to have XTZ or Ethereum on their accounting books if they're trying to make an investment. And I think that's always going to be a challenge in the space. In this case, all the fees are paid for by the infrastructure provider. And so if someone is receiving the token, they won't be paying a fee to sort of like receive that. And so I think that's just always going to be a constant challenge, but we do try to keep our fees down to like the least amount possible. And I think, yeah, there's definitely going to be, hopefully we start to see like really interesting dynamics we didn't expect sort of like Maker surpassing the price of ETH just because of the usage. If that happens, that's probably a good thing for the space, and would definitely be an interesting development if it occurred.
Yeah, and just to bring something up here that's sort of mainstream. So actually what caught my attention, one of the first projects I heard of in 2017 that got me thinking about how increased liquidity could enter into the cryptocurrency markets was the Winklevoss coin ETF, where it was a traditionally structured ETF that had a basket asset of Bitcoin. I think a single share represented, I think it was 5 Bitcoin at the time. And this kept running into SEC regulatory non-approval. And it was tabled for years. I believe this goes all the way back to 2015. And this is, they were essentially trying to set this up as a way to traditionally invest in BTC for the investment managers that wanted to invest in ETFs as their vehicle. So my question is, could the Winklevoss use the models that you've presented in terms of security token models that TokenSoft is able to execute on? Could they use that kind of setup to issue the coin ETF?
We think so. I think there's definitely, when people are like trying to get ETFs through, I definitely think there's a ideal that they're striving for, and they're trying to get on the same markets as other ETFs. They're trying to tap into the same liquidity, tap into the same investor base. And I don't know, sometimes just an iterative approach just works well, especially like when the regulations are so complex. Like regulators don't want to see you go from like 0 to 100 right away. That's when they panic. And so I do think a Reg D structure could help provide institutional access for Bitcoin, Ethereum, Tezos. It's something that we'd definitely be willing to explore as well. I think the ETF, the whole ETF story is just not good. There's just no good news out there, and at some point people should try different approaches instead of trying to hammering that through, I think.
Okay, so you heard it here, Winklevi, if you're listening. Some great advice. So I guess I want to focus just a little bit on this topic of traditional exchanges. And you said like the SEC doesn't want you to go from 0 to 100. I wonder if you just have any more insights as to when we could see a digital security on a traditional exchange, whether or not that's through an investment vehicle like the ETF we just talked about, or whether or not that's as a security token product. Like, what are the hurdles that we're facing that need to be overcome in order for this to happen? And what is the time frame? Like, what can we expect?
Yeah, I think there's a fun answer and a boring answer to this. I think what I'd like to see is I think we should just assume like the large institutions aren't going to do anything. Like as startups and as innovators in the space, we should assume they're not going to change, not going to do anything new. And I do think that we should create new infrastructure that does replace those traditional markets. And I think 2020 is really the year to do that. And so I think people are trying to plug into the traditional markets. Well, look at how much traction we've gotten with just trying to like innovate with our own market infrastructure. We actually have some like pieces that are actually mimicking that pretty closely. And I think the thing is, if you try to plug this into traditional institutions, this is a technical space, and so you're going to not necessarily be able to innovate to your full potential. You'll be able to innovate to the point where you can integrate with these large institutions, and you can already do that without the blockchain, right? That's not as exciting. And so I think my challenge to the space would be like to continue to innovate and try new things and see, what can we build that actually might surpass the traditional market infrastructure, and what might be able to provide higher integrity markets because everything's on chain, everything's transparent. What can make it more peer-to-peer because there's so many middlemen in traditional markets that are all taking a slice of the pie to the point where there's nothing left for the average person. So how can we change that? And I do think we can actually build higher quality infrastructure without the traditional markets by reimagining and rethinking this. Except for custody, we might need custodians still. But I think that's what I'd like to see the space do.
Very cool. And yeah, Will, did you have anything else?
No, I did not. I think we can just go ahead and wrap this
Will,
up
can you
here.
tell us about the hat you're wearing?
Oh, yes. I have this hat right here, Accredited Investor. If you would like one just like it, you can go to Mason's shop, TokenSoft.io.
Exclusive.
Love this hat.
Very nice hat.
Where's yours?
I have my, today I'm wearing my SEC hat.
Oh, that's very fitting.
It's just that kind of a day.
Well, all right, guys. Thanks for your time. And let's go ahead and wrap this up here.
All right. Well, thanks so much for having me. It was a pleasure to be here.
Absolutely. And everyone, make sure to follow Tezos Commons and subscribe to the YouTube channel, and make sure to look out for the next episode of TezTalks Live.